Hello and welcome to the Outsider Club Chart Wars. I'm Brit and Ryle. This is my good friend and colleague Christian the Hammer. The Hammer, we call him the Hammer because he always nails it. You know the format. We each present a chart and you get to decide which one is better or whatever. In any event, I always give Christian the first punch. So, Christian, let me have it.
Today, Britt, we're talking about the greatest stock investor of all time. You might think it's Warren Buffett, but no, it's Nancy Pelosi. Nancy Pelosi turned $10 million into $240 million after serving the public for, I don't know, 40 years or so. Last year, she made 70% on the S&P 500 on her portfolio,
That's a
dwarfing the
lot.
24.9% in the S&P 500. She's been dubbed the Queen of Stonks. Anyway, we're not saying that she's corrupt, but All right. Now there's a new representative, but like Unusual Whales, all these people have made a ton of money just piggybacking on her stock picks because they figure she knows something. The bills are coming out, and she's got an insider tip, and it's legal for Congress, of course. We got a new representative, Laura Lee, who just today filed that she purchased up to $100,000 in a small cap company, $135 million company called Tahura Bioscience. She's the only Congress critter to buy this stock. And as you can see by this chart, it went up 35% today before pulling back a little bit. Um, Laura Lee is on the House Committee on Administration, Oversight, and Election Operations, and Transparency. Her insight into regulatory shifts might hint at the Hura bet. Now, this company just merged with another company called Catera Therapeutics, and she's likely banking on the growth potential here. Tahura Bioscience is a phase 3 immune oncology company focused on cracking cancer immunotherapy resistance. Um, Their lead contender is called IFX 2.0, is an innate immune agonist injected intramurally to flip tumor cells into immune targets, sparking systematic anti-tumor response. All right, now I'm not a doctor, and I can barely read these words, but the uh, the phase 1 trial nailed a 63% ORR in MCC patients resistance to prior checkpoint inhibitors. And the drug lasted up to 33 months. You can do your own research on if you are a doctor and believe in this or not. But they also got 2.23 million pipe financing tranche. So investors are at least giving them some confidence. The phase 3 trial started in, I believe, June 9th, 2025. These tend to last 18 months. So you got until about 2027. And if the phase how these biotechs work is if phase 3 hits it, they're a moonshot. So this is a high risk, high reward biotech. And how I pick biotechs is when they're getting close to phase 3, the announcement, whether it's good or not, you'll see a big spike in volume as all the doctors and insiders load up if they believe it's going to be positive. But in this case, we're doing the Nancy Pelosi style trade. We're betting that the Congress critter knows something that everybody doesn't and is loading up here at the very bottom. This stock has dropped. It's gone through like a ton of stock splits, and but now it's starting to put in. It's starting to put in, as you can see by this chart. Back in March, it bottomed out, and then in June it put in a higher high on volume. I guess because of that phase 3 trial starting, and then just today it put in another high. So we have higher highs. I mean, we have higher lows here, and the downtrend has been broken. You can see the long downtrend that goes back actually 2 years has now been broken today with this big move. You can also look at the black and red line underneath. That is called the MACD, the Mac Daddy of indicators. And you can see the crossover corresponds with lows. So we had this low in late June, and then it just crossed over again today. And so this is bullish. So, as I said, you take a flyer on these stocks and, you buy 10 of them and one of them will get you a 10 bagger or maybe two. And that's how you do it. So, put this on your watch list or, go ahead and buy it around, I'd buy it around 290. I think they generally pull back a third. So anywhere on the pullback over like 3 days from now, I'd be buying it. That's what I got today, Britt.
Nice. I like it. I love that March low you showed. That's a double in like what, a week, two to
Yeah.
$4. That is not bad. It's not
This thing will
bad.
move when it wants to.
All right, Christian, here's what I got for you today. This is Lemonade, an online insurance company. Now, you could definitely look at this chart and say, are you kidding? The stock has already run. Like, look at that move. You could also say, why did it run like that? And is there more coming? That's the point. It's all about earnings. Lemonade is, as I said, is an insurance company. It's an upstart for sure. It's got a $4 billion market cap. And they just reported they have over $1 billion of premium in force. That means people have paid them $1 billion to insure their stuff. That's up 12% since the last quarter in 3 months. That is really, really good growth. And the company just went cash flow positive, not hugely, but they are having money funding operations at this point, which is also very good. But the biggest reason Lemonade skyrocketed like that is because of its loss ratio. Loss ratio for an insurance company is the amount of money they pay out of their premiums in claims. And for 2 straight quarters now, Lemonade has reported a 70% loss ratio on their insurance portfolio. Now, if you Google loss ratio, Google will tell you that 70 to 75% is very high, and that the loss ratio should be around 60%, meaning $6 out of every 10 goes to pay out claims. But if you actually check the numbers in the various sectors, in 2024, property and casualty insurance, the loss ratio was 96%, meaning that insurance companies that had property and casualty branches were paying out 96 cents of every dollar they took in. That is not very good. That is a very small margin. Auto insurance in 2024, the loss ratio was 77%. Better, but still not very good. So the fact that Lemonade has a 70% loss ratio at this point of its existence is quite good. Why can it grow? Well, first of all, it's still a very small company. It only offers car insurance in 10 US states and 4 EU countries. Yes, it is in Europe as well as the United States. There's a lot of growth potential there. They still have 2.7 million customers, which is up 24% in a year. Those numbers will continue to grow as Lemonade continues to roll out in the rest of the United States and in Europe. Now, the 5-year chart. This is the potential that Lemonade has. As you can see, this recent rally that we were just looking at on the 3-month chart has only taken it back to its highs over the last year. It's on the verge of a breakout that could challenge some of these COVID bull market levels. You're looking at first target is like right here, about 63. Pretty obvious, really nice support level. I think the stock has no problem running to that level soon. On those grounds, it's a good trader. Longer term, 85 and 107 are pretty reasonable targets as the stock grows. Trade it. Also own a few shares for its growth over the next few years. And Christian, that's what I got for you. Lemonade.
Sounds good.
All right, gang. That is Outsider Club's chart wars for the week. Yes. Hammer finally threw something at me. Y'all take care. We'll talk to you soon.
Later.